start a new topic today, new chapter, bills of exchange. Tomorrow we will not have any class, because tomorrow is a Sunday, so you can happily sit at home and do what? Very good. Practice whatever has been discussed in final accounts till now. Take rest, not sleep. So we'll start the new chapter now, bills of exchange. As our practice goes, we discuss a small story before we start any topic. So write down a small story now. Write down. Write down. Mr. Rich. Mr. Rich. So what is bills of exchange? How to account for it and all now we'll learn in this particular problem. Mr. Rich sold goods on credit. Mr. Rich sold goods on credit to Mr. Poor. Mr. Rich sold goods on credit to Mr. Poor. 50,000 rupees. 50,000 rupees. The value of the goods is 50,000 rupees on 1st April 2014. On 1st April 2014. Full stop. On 1st April 2014. Full stop. When Rich approached Mr. Poor for the payment, Mr. Poor requested for 3 months time. Mr. Poor requested for 3 months time. Full stop. So what happened? On 1st April 2014, Rich sold goods on credit to Poor. Next day, Rich goes to Poor and says, please give me the payment. Because you have purchased the goods from me, you have to make the payment. Poor says, I don't have money now, give me some time to make the payment. Okay, continue. Rich says, I will give you 3 months time. If you give me some security. If you give me some security. So when Poor requested for 3 months time, what is it saying? I am ready to give the time, but you have to give me some security. Poor says, Mr. Poor replies, he says, I am ready to sign on any document you want. I am ready to sign on any document you want. So send me any document, I am ready to sign it and give it to you as security. Okay? Because he doesn't have money, he only has signature. So he is ready to sign wherever Mr. Rich wants him to sign. Continue. Rich takes a white paper. Settle down quickly. Rich takes a white paper. On it, he writes the following phrase. On it, he writes the following phrase. Pay to Now what you do is open inverted commas, pay to the order of Mr. Rich 50,000 rupees 3 months after the date. 3 months after the date. Close the inverted commas. Close the inverted commas. Rich also writes the date, place of drawing the bill, the date and place of preparing the paper. Don't write bill. Date and place of preparing the paper. Puts his signature also on the paper. Puts his signature also on the paper. Now, what happened? Look at the board, everyone. Mr. Rich took a paper like this. He wrote the date here, 1st April 2014, Hyderabad. Write the dates and place, and then he writes a paragraph. What does he write? Pay to order of Rich, Mr. Rich, 50,000 rupees. Normally what they do is they write 50,000 rupees for value received after the date. 50,000 rupees after the date. After the date means from this date. After 3 months, you have to pay to the order of Mr. Rich 50,000 rupees. Okay. Then he writes. Then Mr. Rich signs here. Write his name and then put a signature here. Who will put the signature here? Mr. Rich, who prepared this paper. Okay. Now, on the right side corner, he will also paste a revenue stamp. Here they put a revenue stamp also. Okay. Continue. Rich sends this. Rich sends this paper to poor. Sends this paper to poor and asked him to sign on the revenue stamp. Asked him to sign on the revenue stamp. Asked him to sign on the revenue stamp. Poor signs on the revenue stamp. Mr. Poor puts his signature on the revenue stamp and writes the word accepted. Writes the word accepted across the face of the bill. Writes the word accepted across the face of the bill. So what did Mr. Poor do? Once Rich sent this paper to Mr. Poor signs it on the revenue stamp and he writes across the face of the bill words accepted.
Usually a stamp is kept of the word accepted.
What? Okay, whatever it is. There may be a stamp or sometimes it is written by handwriting also. So words accepted is written by Mr. Poor across the face of the bill. Okay. Now this document transforms from an ordinary paper into a valuable legal document called as a bill of exchange. Read on. The paper now becomes a valuable legal document. The paper now becomes a valuable legal document called as a bill of exchange. Document called as a bill of exchange. Valuable legal document called as a bill of exchange. Okay. When Rich sends it to Poor, it is only a paper of value 1 rupee, because paper value is only 1 rupee. But when Mr. Poor signs on the revenue stamp and when he writes the word accepted, this becomes a valuable legal document called as a bill of exchange. Is it clear? Now who should keep this bill of exchange with him? Mr. Rich should keep it with him or Mr. Poor should keep it with him? Right hand is there with whom? Poor. Once he writes the words accepted, he cannot keep it in his pocket. Now he has to send it to Mr. Rich. Write down. Mr. Poor hands over the bill to Mr. Rich after acceptance. Mr. Poor hands over the bill to Mr. Rich after acceptance. See here, Mr. Poor will write his address also. Because if somebody wants to find him, they should be able to find him, know who the signatory is. So they'll write the address also here. That is all technical part. So what do you write? Mr. Poor hands over the bill to Mr. Rich after acceptance. Mr. Rich will keep the bill with him for the next 3 months. So what will Mr. Rich do with the bill? He will keep it safely in his locker for the next 3 months. Yes? Mr. Rich will keep the bill with him for the next 3 months. Now after 3 months, what will Mr. Rich do? Do puja to this bill? What will he do? He will take out the bill from the locker on the due date of the bill, 3 months from this date. That is on the day when the bill matures. Mr. Rich will go to Mr. Poor and say, boss, I had written an order. What did I write there? Pay to order of Rich. So when I give an order, 3 months after the date, you have to pay me the money. So now, I am showing you the order which I gave you 3 months ago, and you have accepted the order. Now time has come. Fulfill the order. Now I am ordering. See this bill. I am ordering. Give me 50,000 rupees. And you written the word accepted also, no, on that bill of exchange. So now you have to pay me the money. So Poor says, okay sir, give me the bill, take your money. So Mr. Poor will take the bill from Mr. Rich and he will hand over cash to Mr. Rich. And what will Mr. Poor do with that bill now? He will tear it and throw it into the dustbin because his responsibility is over. If he fails, then if Mr. Poor fails to pay the money on the due date, then Rich can approach the court for, we can say, compensation. He can ask the court to give an order to Poor to make the payment to him. Is it clear? So he has some protection. In case Poor is unable to pay, then you can take the help of the court. But you can take the help of the court only if you show a valuable legal document. This will prove that Mr. Poor had taken some loan from you and is now unable to honor the loan. Hence you have come to the court. Then court will give an order to Poor to make the payment. Okay. If Poor has money, he will have to make the payment. If he has become insolvent, then the court will take over all the assets of Poor, settle all the liabilities of Poor, and if it is possible, at least 10%, 20% or 30% of the bill, whatever the court can pay, they will pay on behalf of Mr. Poor. Okay. So there is some protection available to the creditor. In this problem, who was the creditor? Who gave the loan? Rich gave the loan. Who took the loan? Poor took the loan. So Rich is the creditor and Poor is the debtor. Continue. After 3 months, Poor honors the bill. After 3 months, Poor honors the bill. What do you mean by honoring the bill? He will take the bill back from Mr. Rich and pay cash to Mr. Rich or pay it in the form of a check. Honors the bill. Okay? Write down. Mr. Rich will call this bill as bills receivable because he is going to receive money on this bill. Mr. Rich will call this bill as bills receivable. Comma. Mr. Poor will call this bill as bills payable. Mr. Mr. Poor will call this bill as bills payable. Why will Mr. Rich call it as bills receivable? He has to receive money on the bill, no? Hence he will call it as bills receivable. Poor will call it as bills payable because on this bill he has to pay money. Hence he will call it as bills payable. Okay. So all the people who can receive money on this bill, they will call this bill as bills receivable. And every person who has to make a payment on this bill, there can be only one person who has to make the payment. Cannot have 4 or 5 people. So normally the person who has accepted the bill will be only one party, so we will only call it as bills payable. Is it clear, everyone? Continue. Mr. Rich is called as the drawer of the bill. D-R-A-W-E-R. Mr. Rich is called as the drawer of the bill. D-R-A-W-E-R. The person who drew the bill, who prepared the bill, he is the drawer of the bill. Mr. Poor is called as the drawee of the bill. Mr. Poor will be called as the drawee of the bill, not we. For the sake of making you understand, I am saying like that. It's drawee of the bill. D-R-A-W-E-E. Drawee of the bill. W is silent. Will you pronounce it? Drawee of the bill. D-R-A-W-E-E. Write down. It is an bill is an asset. Bill is an asset. The bill, the document is an asset. If I have to receive on it, I will get money. The person who has to pay money on it, for him it will be a liability. Is it clear, everyone? Now we have to show how to account for this problem. Did you understand the story? I will repeat the story once again. On 1st April 2014, who sold goods on credit to whom? Rich sold goods on credit to poor. Rich gave a loan to Mr. Poor of how much? 50,000 rupees. On what date? 1st April 2014. Next day, or the same day, Rich approached Mr. Poor. Poor, give me the payment. Poor says, I am already poor, so I cannot make you the payment now. I want 3 months time to make the payment. So it says, okay boss, you want 3 months time, I am ready to give that 3 months time. But, what do you have to do? Give me some security. Poor says, signature, wherever you want I will put. So, Rich takes a paper, writes the date, place, writes an order. Pay to order of Mr. Rich 50,000 rupees for value received after the date. He will put his signature here and write his name here. And then he will send this paper to Mr. He will also paste the revenue stamp here. He will send this paper to whom? Poor. Now Mr. Rich asks Mr. Poor to sign on the revenue stamp. Mr. Poor signs on the revenue stamp. And he will write his address also here, Poor. Okay. He will also write the word accepted across the face of the bill. Now this document becomes a valuable legal document called as a bills of exchange. Now Mr. Poor will hand over the document to Mr. Rich because security there should be there with Mr. Rich. It should not be there with Mr. Poor. So now what will Mr. Rich do? For the next 3 months, he will put it in the locker and do puja to the bill. He cannot do anything with that bill for the next 3 months. After 3 months, when the due date comes, he can go to Mr. Poor and say, boss, time has come. You asked for 3 months time, 3 months is over now. Take the bill, give me money. If you don't give, I will go to the nearest court. So Mr. Poor says, don't go to any court, give me the bill, I will give you the payment. So he takes the bill and honors his commitment. Are you able to understand? Rich is technically called as the drawer, poor is technically called as the drawee. The bill is an asset. Mr. Rich will call it as bills receivable. Bills. Mr. Poor will call it as bills payable. Rich is called as the drawer, poor is called as the drawee. Okay. The person who is entitled to receive payment on the bill, he is called as payee. Who is he called as? And in this example, who is the payee? Rich is the payee. Because Rich is going to get ultimate payment also, no? Sometimes payee can be some other party also. We will see those transactions also. Now let us learn how to account for this in the books of Mr. Rich and in the books of Mr. Poor. Now we have to play double role. Now we have to play double role. We have to do accounting for these transactions in the book of Mr. Rich and we have to do accounting for this in the books of Mr. Poor also. So, if this is your notebook, you can just fold the paper into half like this. and you write in the books of Mr. Rich, in the books of Mr. Poor. Draw you always on the left side, draw you always on the right side. Books of Mr. Rich, books of Mr. Poor. Books of Mr. Rich and books of Mr. Poor. What was the first transaction that took place? Mr. Rich sold goods on credit to poor. This is the transaction because of which liability was first of all created. And to settle that liability temporarily, Mr. Poor used a valuable legal document called as a bill of exchange. After that, he settled the liability. Okay, so right, first transaction, when Rich sold goods on credit to poor, 50,000. When Rich sold goods on credit to poor, 50,000. When Rich sold goods on credit to poor, 50,000. Please tell me, how will you pass the entry? Mr. Rich is selling goods on credit to poor. When you sell goods on credit to somebody, what is the entry in your books? Debtor account, debtor to sales. Value of the goods which are going out should be shown as income for us. Sales income. And the goods are going out, real account going out, credit. But the value when it is going out should be shown as credit, and we should use the word sales. And who is receiving the goods from Rich? Poor. Personal account, receiver, debit. So what is the entry we write? Poor account, debtor to sales account. Poor account, debtor to sales account. 50,000. Poor, personal account, receiver, debit. Sales, nominal account, incomes and gains, credit. Or goods, real account, going out, credit. Now because of this entry in the books of Mr. Rich, poor has become a debtor. In the books of Mr. Rich, poor is appearing as a debtor. What is the entry in the books of poor now? He is purchasing goods. Goods are coming in. Real account coming in debit. Or if you showed goods as expense, nominal account expense and losses debit. So now goods have to be debited. Who was the giver? Rich was the giver. Personal account giver, credit. What is the entry will pass? Purchases account debtor to Mr. Rich account. Purchases account debtor to Mr. Rich account. See, now because of this entry in the books of Mr. Poor, Rich has become a creditor. Poor is showing Mr. Rich as a creditor. So he is showing a loan received. He is showing a loan given. Okay. Now who has to pay money to whom to settle the liability? Poor has to pay money to Rich to settle the liability. But is he immediately able to pay money? Instead of paying money, he is giving a bill. Write the date also here, 1st April 2014. Now second transaction, when Rich draws a bill on poor, 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 listen to me carefully. Now what is happening? Rich is drawing a bill, he prepares a bill, sends it to poor. Poor is not going to sit on the bill. He is going to sign the bill, accept the bill, and he is going to give it back to Mr. Rich. So now Rich draws a bill, sends it to poor. Poor will give the bill back to Rich. So now Rich is receiving a bill from poor. What is the entry you write in the books of Rich? An asset is coming. An asset is coming. What is an asset? Bills receivable. Bills receivable account debtor. Who gave the bill? Poor. Real account coming in debit. Personal account giver credit. So what is it real right? Bills receivable account debtor. I just use a shortcut B by R. Bills receivable account debtor 50,000 to Mr. Poor account. What is the logic behind the entry? Bills receivable, real account coming in debit. Mr. Poor, personal account, giver credit. Same date we are assuming. Normally it will happen on the same day. We will not wait for a week to draw the bill. We don't know whether this guy will give us money or not. So as soon as we send the bill, next day we will send the bill for acceptance, or the same day we will send the bill for acceptance. Okay? What is the entry in the books of poor? Now he is giving a bill. He is giving a bill. A bill is going out from him. Bills payable, going out. Real account, going out. Credit. Who is receiving the bill from him? Rich. What is the entry right? Rich account. There are two bills payable. Mr. Rich account, there are two bills payable. Mr. Rich account, debtor to bills payable account. Mr. Rich personal account, receiver debit, bill going out, credit. Okay. Now, what will happen for the next 3 months? Nothing will happen. After 3 months, Rich will go with the bill to Mr. Poor, hand over the bill to him and take cash. Read on. When? Now you have to count the date now. Bill was drawn on 1st April 2014 for a period of 3 months. So 1st April to 1st May will be 1 month. 1st May to 1st June will be 2 months. 1st June to 1st July will be 3 months. Plus 3 days grace. 4th July 2014, not 4th. 1st July 2014 will be the date of maturity plus 3 days grace. The due date will be 1st April 2014 plus 3 days grace. 1st July 2014 plus 3 days grace. It will be 4th July. 1st April to 1st May 1 month. 1st May to 1st June 2 months. 1st June to 1st July 3 months plus 3 days grace. So on 4th July we will calculate. We will learn about calculation of due date in detail in our future classes. Not now. Maybe after 3-4 days we will continue. We will talk about how to calculate due dates in a perfect manner. Not now. So on 4th July, Mr. Rich will go to Poor, hand over the bill to him and take the money from him. So right. When Poor honors the bill, when Poor honors the bill, when Poor honors the bill, what is the entry right? Now Rich is receiving cash, he is giving the bill. Cash is coming in, bill is going out. What is the entry pass? Cash account in R2, bills receivable. 4th July 14, cash account debtor, 2 bills receivable. Cash account debtor, 2 bills receivable, 50,000. What is the entry in the books of Poor now? He will take his bill back. He is getting his bill back, and from other hand he is paying cash. He is getting his bill back. He calls this bill as bills payable. So his bill is coming back to him. Bills payable account debtor to cash or bank account. This is how we are going to account for a normal trade bill in the books of Mr. Rich and in the books of Mr. Poor. Is it clear, everyone?
Yes, sir.
Did you understand? Okay, what we'll do is we'll also learn calculation of due dates. Just give me a second. Stop.